Okay, so guys, today we are going to make the revision on the very common but easiest topic, which is the ownership of firms. Okay, so let's have a very brief revision now, and then we will go through some past papers. So here we have some summary, and I have sent you the notes, so you can check the files. And then let's check some important wordings. Okay, first, firm is just a planning unit which makes decision about the employment of factors production, and we are talking about they are going to make the goods and produce the goods and the services. Okay, so actually the focus is not what is firm, but the focus today we are going to talk about the features of the private ownerships. Okay, and private ownership also is also including the syllabus, but it's not that common. Okay, so if you have time, let's go through very briefly about the public and then go deeper for the private enterprise. Okay, so about the public enterprise, very simple. Actually, there's two main types. Okay, the first one is the government departments, and then the second one is about the public corporations. Okay, what are they? The main difference between them is directly under the control of the government. That is government departments, and for the another one that is more independent. That will be the public corporations. So, let's look at some features. For the details of what is the features of the government departments, they are mainly financed and directly operated by the government, so they are not actually working too much concerned about the efficiency. Okay, but one of them that is the financed by trading funds. Okay, one type that is a trading funds, and they are not making money, they are not profit making, but they are self-financing. Okay, so I think you should be concerned about some examples. Okay, so for the government departments, which is totally under government control, that is a census department, the inland revenue departments, and the social welfare departments, so something like that. And for the trading fund, that's different. Okay, the Hong Kong Post, their company registry. Okay, these things is they are not really making profits, but they have to. You find that their charges is more because they need to self-finance. Okay, and the last one, they just like a company, but only owned by the government. They are the Airport Authority of Hong Kong, the Hong Kong Science and Technology Passport Corporation. We will find that they also making money. Okay, because they have some their purpose is just they are running just like a firm. Okay, so that's about the public enterprise, and let's see some features about the public enterprise. Okay, I think for the exam you just memorize two of them is enough. Okay, so for example, because they are owned by the government, their capital is very special, because government most likely is one of the very powerful capital owner. Okay, so they are more stable in source of capital. Okay, and then about the information they have, government is one of the powerful organizations have owned the information about their city, so they will have a better access of information and data. Then they are more reliable supply of goods and services at lower price because their scale is so big. They enjoy the economies of scale, and but actually they have some drawbacks. Okay, their average production cost, average cost is more likely to be high because they are all the members are the government employed, the civil servants, so they have lower working incentive. Okay, because their job will not lose, and the most in the government department, so they have less incentive to work harder. Okay, the efficiency will be lower. Okay, then after finish up on the public, we go to the private one, and private is more types in that. Okay, in total there is 4 types, and we are going to go through these features, and also we will go with some 2 ways for them to raise the capital. Okay, so first, private enterprise, which means that the company is owned by the private sector. Okay, so actually there's 4 types. We can see they are the sole proprietorship, the partnership, and the private and public limited company. Okay, so what are they? Actually, we can simply to divide into two types. Okay, two main category. The sole proprietorship and partnership, they are unlimited company, and the public and private limited company, they are limited company. Okay, so main difference is that. Okay, so let's go through some key features. Okay, for the rest I would like you to just have a simple reading, and then you have an idea. It's okay, but for the rest, for some features I highlight, please remember because they are critical and they are useful for your exam. Okay, so legal status. If the company is not a limited company, so they are not legal entity in law. Okay, they are not a legal entity, so that means under the law they are not a single party. Okay, they are the same thing with the owner. Okay, the company is the owner is the company. Okay, so any duty in law, obligation in law, is applied on the owners. Okay, so it's not a legal entity. Actually, that's not a good thing. So that's why they have to face the unlimited liabilities. Okay, when the company have they are unable to when the assets of the company is unable to pay all the debts, then the owner have to pay by their own. Okay, but if they're in the limited company, they no need to pay the extra debts. Okay, extra amounts that outside their assets. Okay, exceeds their assets. Okay, so then but you will find that these two features is very inconvenience or is a disadvantage for the owners. But why? The majority in Hong Kong, the majority companies in Hong Kong, they are sole proprietorship or partnership. Okay, why? Because two critical things. First, their setup procedure is very simple. Simple, that means low in cost. Okay, shorter time, shorter cost in finding other supporting evidence, or no need to find an audit or accounting firm to do so much thing on me. Okay, so that's reason number one. And the reason number two is the profit tax rate. They are lower. Okay, they are lower in the profit tax rate. That means they can hold more profit in their hand. Okay, so these are the key features of the sole proprietorship and the partnership. And you will find that the difference between sole proprietorship and partnership is kind of the numbers of people. Okay, so actually more people, what is the advantage of that is the source of capital. Okay, I think a source of capital is one of the key difference between that, because one person, less source, more people, then more source. Okay, so and you will find that if the owner need to do the division of labor, then partnership is easier to apply. Okay, because they can find different people who have different specific skills is healthy for that's beneficial for the business. Okay, so that is about the unlimited company. But how about the limited company? Okay, as we talk about that, limited company is a legal entity. Okay, it's a legal entity, and they enjoy the limited liabilities. Okay, so that is a good thing. But what is more, the drawback is they have to suffer higher profit tax rate, and they have a little bit more complicated setup procedures. Okay, high cost in setup, and however, actually limited company is wider source of capital because they have two more ways to rise up the capital, which the unlimited company cannot. One of that is they can issue shares, and the second one is they can issue the bonds or the debentures. Okay, so which that means they invite more people to join or more people to finance their business. Okay, so now but you may have a question. Okay, private and public, they are both limited. They are both limited companies. So what's the difference between them? Private limited is kind of a small group of people. They know each other. They're running a business together. So you will find that the limitation of the shareholders is up to 50 for private limited, but public limited is up to unlimited. Okay, so and also when you find that in the transfer of the ownership, private limited kind of they know each other. So if they want to transfer their ownership, or that means when they create, some of the shareholders want to create, or they want to invite someone to join our group, they need the consent of all the shareholders. Okay, I am a friend of Mr. B, but if I want to invite him to my business, I need to get the consent of all the stakeholders from number 1 to number 10 in my company. Okay, I cannot do this decision by myself. Okay, and also if I want to quit, I need to ask the permission of the others. Okay, so is private limited, but public limited no any limitations. Okay, but you will find that even there is so inconvenience about these features, but why still there is some private limited company? Because they can keep the financial information in secret. Okay, that means they need to disclose the information to the shareholder only. But for the public limited, they need to disclose their financial information to the public. That means including other potential investor, all the opponent companies. Okay, so it's actually even us, we don't know, we don't want to share so much privacy to the others, right? So it's the drawbacks of a public limited. Okay, and in the exam you will find that some people are some keywords. Okay, some statements and some MCs, they will just like try to trap you. Okay, for example, they will say that limited company is more profitable, but remember this is not a must, because when we're talking about the types of the company, private companies, actually just like types, but the way that they can achieve some they get some achievement is not a must. It's not 100%. We can say that they have advantage, but actually whether they can do this, not sure. Okay, so also they are not bigger in scale. Okay, so you understand that if the sole proprietorship is owned by Li Ka-shing, okay, in the richest people, richest person in Hong Kong, and compared with our class own the whole company, and we are sure that the sole proprietorship is bigger in scale. Okay, so it's not a must. And the last one is about the source of capital. Okay, same idea. Okay, it's not a must for the partnership or the public limited have more capital. Okay, so be aware of the word. It's not more, but wider source of capital. We have a higher chance to get more capital. But whether we can do this, not sure. Okay, so and then we go to the last part about this topic. It's about the source of capital, that means share and bonds. Okay, and then what you are going to do is very clear about the advantage and disadvantage when we buying or issuing these things. Okay, that means you have two roles. One role is about the company stakeholders, shareholders, and the other is a potential investor. Okay, so let's go for what's that. What are they? And shares, actually, they are the ownership of the company. They try to sell. If we are going to issue shares, that means I try to sell part of the ownership to the others in order to get the fundings. And actually, we have to pay. What is the cost of that? Is we will try to give out dividends to the owners. Okay, but how much is the dividends? It depends on the profits of the company, so it's variable. Okay, it can be different year by year. But how about then the other way is about the bonds? Actually, that is not selling the ownership. I just try to borrow money from the others, so that is a debt. Okay, but the good thing is I don't know whether it's a good thing, but it's more stable expenses. It's about the interest, because I have to pay the interest, which in the fixed rate is agreed item. Okay, with to the others. Actually, the shares and bonds, the voting rights, the shares involve the voting rights, which with is welcome for the investor. So this is the difference. Bond, because they are just like creditors, so they are not part of the company, so do not have a voting rights. Okay, so we know the features about the shares and bonds. Then we have to we can try to figure out the advantage and disadvantage. But then we have two roles. Okay, remember we are talking about the existing company holder. That means they are thinking about whether they issue some shares or bonds. Okay, actually, why they have to issue shares or bonds? Because they need some capital, so they need some money, cash flow. Okay, to run the business. But they have two options: bonds and shares. So whether I sell some ownership of the firm in order to get the cash, or I just try to borrow from the others. So actually, if I raise up by the raise the capital by shares, actually I have no obligation to pay the dividends. Okay, that means when my company is not making profits, I can choose not to share the dividends. That means my interest burden is quite flexible, even that is less burden. Okay, so when I have money, I can share more. But if I have no money, I do not have to share more. But actually, at this point in this, which is a disadvantage of issuing bonds. Okay, when not issuing bonds, because they are only creditors, they will not they do not care about whether I'm making profits. They just want interest. They need a fixed rate interest. Okay, so this is disadvantage for the bonds, and for the second advantage for these shares is they have no obligation to redeem the shares. Okay, I don't know whether you understand the concept about redeem. Redeem does mean when a certain years later I have to pay you back in order to get back ownership of the debts. Okay, for shares I do not have obligation to do that. Okay, I no need to repay your money. But for the bonds, because it's just borrowing of money, I have to repay the capital to the creditors. Okay, so this is one of the disadvantage for the bonds, and for the third point you can read by yourself, because I think 2 points is enough. And how about the disadvantage? Actually, because shares is involving some voting rights or even the ownership of the firm, actually when I sell some of them, actually I'm losing the control of the company. You understand that, right? I lose the control, then that may be a risk. Okay, if I lost more control, I'm risking in being taken over by the other companies, okay, or by individuals. Okay, but exactly this is the advantage of issuing bonds. Although the bonds have a greater interest burden, they have to redeem their the bonds. However, they do not share the ownership with others. Their risk of being taken over is not high, even no effects on that. Okay, so that's about the consideration of their company owner. But how about their investors? Okay, if I'm a potential investor, I have some money, I want to invest in buying share or buying bonds of that company. So what should I do? What can I consider? First, if I want to have if I buying shares, then I can obtain some operating right of that company. I can get control of that company. Okay, is that good or not? That should be a good thing, but whether I need this depends. Okay, then second is about the dividends. I invest in some company. The main focus is about the return. The return of share is about the dividends of the shares, but it can be very high, it can be very low. It depends whether the company make profits. So it's more unstable, but can be very high. Okay, so good side advantage, that is a possibility to make huge profits. Okay, make high dividends. But for the disadvantage, it is uncertain or unstable rate of return. Okay, so and also in the second consideration is about the repayment when the company wins up. Okay, when the company wins up, they have to pay back to the staff first, then second to the creditors, that means the bondholders, and third is the preference shareholders, and the last the ordinary shareholders. Okay, now that you only know shareholders. Okay, so shareholder is the least one. to get better repayment. Okay, so actually the problem is the risk is higher. Okay, so then and exactly that is the good things when buying bonds. If when buying bonds, I can get more certain or more stable return, and I can get the repayment when the company wins up first. Okay, so the risk is lower. However, I do not get the rotating rate of the company. I do not get the extra return from the company. Okay, and that's all for the chapter. So later on, we will go through some